Well, a busy day on the IPO street. We have not one but two new companies that are going to be going out there on the IPO. It's going to be the day one for both Fine Organics as well as RITES. Very quickly to run you through what both of these companies do. Fine Organics is engaged in the manufacturing of oleochem based additives. A bit technical really, but yeah, we're going to be joined by a very special guest to talk about that. And meantime, RITES is a Government of India enterprise under the aegis of Indian Railways. It's a consultancy organization with central as well as state governments as some of their key clients. So what should you do? Should you put in your money in these companies, and what exactly are the prospects? Let's discuss that with Jagannadham Thunuguntla, the head of wealth and head of research rather with Centrum Broking. Jagannadham, thanks so much for joining us on ET. Now let's start off first with Fine Organics. Oleochemicals, a bit complicated perhaps for our viewers to discuss, so straight to the point then, how exactly do the prospects of this company look? Because for one, I think most in the street seem to be pretty pleased with the valuations of this company.
To put in simple terms, oleochemical based additives as contrasting with the petrochemical based additives are natural and more environment friendly kind of additives. So going forward, as more and more environment friendly products will find traction across the globe, I think this company should be finding a good customer base. Out of their 387 products that they market under Fine Organics brand, about 72% go into the food side and 28% goes into the plastic side. So that is the broad business. I mean, instead of getting into too much of technical complexities, and the company has healthy financials and about 18% EBITDA margin and about 26% ROE that reflects well on the company's financials. And the company has very small debt as of now. I don't think debt is really a major concern as we speak. The company operates with through 3 manufacturing facilities, and they are looking for expanding more, and need to be seen how the debt will play out eventually. We feel it's a niche kind of play, and there are not many peers to talk about in the space. And in the split chemical space, in the globally, it's the largest player. In India, it's the first time they have introduced. So it's a very niche kind of theme, and we feel it will take time for the market also to digest and to understand this new area. That's why we have given a subscribe for long-term kind of rating, that is 3 on 5 on our IPO rating scale.
Hi Jagannadham, this is Nayantara from the New Delhi newsroom. So we've discussed Fine Organics. I want to also get your views as far as RITES go. What are you advising your clients? You know, this is also a milestone for this government, which has been looking to monetize railway companies. It's the first IPO of a rail company, so no benchmark as such either. IRCON and others still have to be listed.
As you rightly said, it's a first ever IPO in India from anything to do with the Indian Railways. That itself is an added attraction to the stock, and it's a hands down and almost a no-brainer kind of fantastic credentials. If somebody closely looks at the market cap of the companies, will be about 3,700 crores, and the company has about 2,000 crores of cash on the books. That means technically you can understand almost more than 50% of the market capitalization there is cash available. That means you are getting almost the entire business at only 50% of the price. And also if you look at the financials, it's a very healthy EBITDA margin, and also the ROE is about 16%, EBITDA margins of 28%, almost negligible debt on the books, and it has perfect credentials, and one should look at. Of course, having said that, being PSU naturally will depend a lot on the government orders. 77% of the order book comes from the government. To that extent, one has to keep an eye, and as of now the company has about 4,800 crores of order book, which translates to almost 4 times that of the revenue, meaning thereby next at least 2 to 3 years revenue visibility is clearly established. So that is a very comforting factor. Only hiccup, if at all, to talk about is that last 3 years the revenue growth is CAGR of about only 9%, which is not a stellar but at the same time stable kind of revenue growth. So barring that, I feel it has perfect credentials to look at. And on top of that, even valuation is so reasonably priced at 10.5 times FY17 is one of the rare IPOs to get priced at such a low PE multiples in comparison to many other IPOs which generally tend to be priced at much higher levels.
Interestingly, like RITES, even Fine Organics for that matter does not have comparable listed companies. Perhaps maybe an AVT Naturals would come a little close when it comes to oleochemicals. But yeah, it's not an apples to apples comparison. Very quickly, let's go across to Karunya Rao then, because apart from these two IPOs, we are also watching out for the second tranche of the Bharat 22 ETF. The follow-on offer was in fact lapped up by institutional investors. The portion reserved for anchor bidders was oversubscribed at a good 3.34 times. Let's go across to Karunya Rao then to tell us about what the response has been like. Karunya, over to you.
Well, Mubina, I was also going to update on the anchor investor portion so far that we have been able to, see for Bharat 22. It's been quite overwhelming because do remember that they were planning to, they had actually reserved about 25% of the total issue size, which was about close to 1500 crore, and what they actually saw in terms of anchor response was bids worth 5100 crore rupees. So clearly a lot of mutual fund houses, a lot of brokerages, a lot of HNIs have shown a massive interest in this second tranche of Bharat 22 ETF, and that's exactly what we're also expecting. As far as the retail investor issue goes, we're expecting a good response there as well. But what so far we know is that the anchor investors actually subscribed for nearly 3.5 times, garnering subscription for a little over 5100 crores.
That's what the data is pointing towards. The response for the second tranche of the Bharat 22 ETF. It's a thumbs up from the anchor investors, which I guess is also a big deal, Mubina, at a time when you're seeing the institutional investors and dealers around the world press the sell button on all emerging markets, including India. Before we go into a commercial break, I want to go back to Jagannatha. You know, today is the day where it's being open to retail investors. When it opened in November, when it was launched, a stellar response. Even the government never anticipated that kind of a response. It had to increase the issue size to 15,000 crore rupees. Tell me, what are you advising your clients? Because after that, in the last couple of weeks, you have seen the Bharat 22 ETF price fall below the launch and the issue price. So what is it that you're advising your clients? It is still a good collection of 22 stocks.
It's a basket of ETFs, as you said, 22 good companies. Just that we are going through that kind of market times. I think when the Bharat 22 ETF first tranche was launched, it was obviously markets were at a very robust kind of stage. Now I think there is markets are in more undeciding kind of zone. So to that extent, the quality of the companies is definitely good. So if somebody is looking for long-term and stable kind of portfolio, this ETF should be considered. But it may not be a runaway kind of thing, because it should be meant for stable, long kind of clients. This is the perfect basket to look at.
So investors, viewers, take your pick. We have Fine Organics, RITES, and even Bharat 22 ETF, which you can invest in. And of course, Jagannatham just gave you a detailed explanation on what looks good in each of these companies. Thanks so much then on that note for joining in this very special discussion.